Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Good morning, April 8th. What a couple of weeks we've had, or what a week we had last week, and coming into another eventful week. We have a lot to go over. We're going to start with the recommendations as always. So before I jump into the recommendations, I just kind of want to go to a play-by-play of just some key points, right? So we had the outlook at the end of April, and then last Monday, on the last day of March, we had the prospective planting, and that pointed towards more soybean acres, less corn acres. Initially, that was a little friendly for beans. And then Wednesday was Liberation Day. Thursday, markets started dropping, and Friday, the soybean market absolutely got destroyed. But the corn market kind of did a little bit of the opposite, where it was a little softer after last Monday's report, and then it started recovering. And then finally, yesterday's session, it got into an uptrend. So we're going to go over all of that. So we have interesting markets here after the meltdown in the soybean market last Friday. And we also, 2 days from now, on the 10th, we're going to have the April USDA report. And then honestly, typically after the April report, we're kind of in full-blown weather mode until that May report, with just planters either running or not running, or how much planting can get done that last part of April and first part of May. So there's a lot to go over. Let's start with the recommendations. I'm going to pull up the screen here. We're going to share that. And it's very simple this week. No action recommended this week. We'll get into the details of it, but the main reason, it's not that this isn't an eventful week. It's not that there aren't necessarily opportunities this week. It's that when the world is chaotic, it's been my experience that a lot of times, unless you absolutely know that it's bringing an opportunity that you've been waiting for and it's time to execute, unless you have absolute clarity and certainty, taking 2 steps back and not rocking the boat a lot of times is the best thing to do. What we absolutely don't want to do is to get whiplashed by this market, have emotional knee-jerk reactions that we'll regret. So what we're going to do today, we're just going to sit back. It's not that we're ignoring the noise out there, but we're going to try to make sense of what's actually happening in the market and try to interpret it, almost bring a sense of normalcy into the chaotic headlines that we're seeing. There's a lot of speculative opinions, and I would even say money flows going on. what can we actually grasp about the grain market? So in this moment of, to some extent, chaos and uncertainty of the trade wars, we're going to just kind of zero in on back to the bread and butter basics. Let's start with South America corn growing, because that's the only weather risk we really have, any significant weather risk. Soybean harvest down there is over 80% harvested, so they're on the home stretch. We have some weather risk on corn. We'll go through this quickly, but this big green area, this is vegetative development. The weather risk is about a third of this. It's the gray area and I talked to customers down there. It's tasseling, and there is rain forecasted. So I think that about a third of the Brazilian double crop corn crop, you can almost lock in as whatever normal good yields are for them, which is way under the U.S. Corn yield, but it is a double crop, and it's going to be okay. 60% still has uncertainty and weather risk ahead, and there's no guarantee. They need continued rain. So ballpark, a third is going to be probably just fine. 60%, it's a coin toss. There's still weather risk on that. The next image is what we always go over, which is the pyramid. The base of the pyramid is building a portfolio. If you're watching this in real time, you and I have worked on this, and we've put together this portfolio. And then based on that portfolio, we look at seasonals, funds, and technicals. These are the habits of grain marketing that allow us to take consistently good decisions. The question now, and this is the major question, do we need to deviate from our best practices, so to speak? Do we need to deviate from our normal course of action because trade wars have changed everything, and all of a sudden we are in a completely different world? Do we need to deviate because the world has changed? And maybe the answer is yes, but not this week. And I want to build a case for this. I want to watch a couple of indicators very, very closely. And it's actually, in my opinion, it's very interesting what we're seeing in the markets on that note. So we're going to start with soybeans, and then we're going to shift over to corn. I have basically the same images for beans as I have for corn. We're going to look at the funds, then we're going to look at the futures, and we're going to look at basis, and we're going to look at some spreads. So starting with beans, the first thing that I'm not going to go back to concepts that I've mentioned in the past, but what I want to point out is just this fund movement between March 25th and April 1st. Funds were kind of starting to sell. Then we got that report on the 31st, and between in the week leading up to that report and the one day after that report, we actually saw funds reduce their long position in beans. So they reduced their long position in beans. And then that was Tuesday. So the report comes out on Friday, but it's based on trade through Tuesday. So as of last Tuesday, a week ago, funds had reduced their long position in beans. And then Liberation Day on Wednesday, and then start dropping. Well, I'll show you this on the graph, but we gap lower on Thursday and then absolutely get destroyed in the bean market on Friday. But it's not that speculators were saying, oh, this is bad news, let's sell this hard. In anticipation of that, they were basically back to a net neutral. As hard as we sold off last Friday, I expect the next Friday's report to be a big red line down, because it just seems to me like those spec funds were selling, and just that managed money was just trying to push the bean market down. But we'll have to wait for Friday to see how they traded through today. And it actually might be interesting to see, because maybe they went down and they're already coming back up. So on that note, let's look at the what happened in the futures. Couple of key technical things that I want to point out. This is the 200-day moving average, and it's coming down. This is the 20-day moving average. It's also coming down, started going up, and then it's coming back down. The main thing I wanted to point out, and I'm going to do this in black, is we have a gap here. Now, trader talk, years doing brokerage, the old adage is gaps get filled. So on that note, we would expect at some point in time to trade at that price level. Now, does that gap get filled and then the price moves higher? Does the gap get filled and then that's the end of the market? I think that's something we have to watch very closely. But that gap between, that was left last Thursday, I'm looking at the July, that's going to be about 1040. My hunch is it's going to get filled sometime this spring. Does it get filled and move higher or filled and move lower? We don't know. Maybe it'll be filled by next week's video. By Tuesday, maybe we'll say, oh, that gap got filled. Now is it going to go higher or lower? And we'll have those decisions to make. But it was a big bad bar down on here, this big red one. And I'm going to give you two narratives on that, and then we're going to look at a couple of images that are going to help us digest it. Narrative number one. The retaliatory tariff from China was over 30% on ag products. So if we had $10 beans, 30% tariff, what happened in 2018 was basically the exact percentage of the tariffs was just the wind just got knocked out of the bean market. So it was, I believe it was a 20% tariff, maybe it was 25 off the top of my head, I don't remember, but it went from basically over 10, like 10.50 down to like 8, right? So one narrative is $10 beans, 30% tariff, I'm rounding, right? $10 beans, 10 plus dollar beans, 30+% tariff. These beans are going to 7. The fall has just started. We're going to have beans between 7 and 8. You just have to sell. It doesn't matter if you sell now or sell later, you just have to sell. That's one narrative, okay? Here's another narrative. Seasonally, we get a spring rally. Funds have made money selling off beans, made money getting out of their long position on beans, and now they just want to get one last push to get rid of all of the week longs, so running all the stops and just pushing out all of the week long positions so that they can come in and scoop up beans under $10 and wait for a potential spring weather rally, which maybe we get, maybe we don't, but funds are going to want to be long coming into that. And they're probably going to start building a long position over the next couple weeks and intensify that long position until we get or don't get whatever type of rally we're going to have. If you've been watching and following our recommendations, you know how I feel about seasonality. And my attitude is typically, let's make sure we have bases loaded in case we get a big old home run rally into the spring. Let's just make sure our bases are loaded and we're ready for that. And that's most years having that attitude towards springtime is the right attitude. Does Friday change everything? That it's been all weekend long. I was reading and researching, and that was the question on my mind. Should that change? So here's an important caveat to remember about just the concepts of market. It's the concept of cash, spreads, futures. When you have strong demand, when you have a demand rally, what you'll see, first of all, is you'll see an uptick in cash markets. They say, okay, I don't care what's happening on the board of trade. I actually want grain. So yeah, I'll pay you a little more. No problem. So basis is a proxy for the strength. I mean, that is the strength in cash markets, right? So first thing you see is cash markets. Now look at the screen, and we have seen obviously the exact basis levels change from region to region. I'm not saying this is your basis level, but look at this basis recovery here. We are seeing that the basis has recovered, and it's not above the 5-year average or whatever this is, 3-year average on in all regions, but it has strengthened in all major Corn Belt regions. So we're seeing soybean cash markets strengthen. Just think about that. Trade war. Why is trade war bad for beans? Because there's not going to be demand. Well, if there's not demand for beans, why is the basis improving? Here's another big point on the bean demand, okay? Trade war is going to destroy our demand for beans. Okay, Brazil just raised the largest soybean crop that any country has ever raised. Soybeans out of South America are cheaper. So what demand are we losing? The business was already going to Brazil. We actually had stronger than expected demand for beans just right after harvest. That was stronger than we expected. In South America, they're having strong basis, seasonally, exceptionally strong basis for harvest time. There does not appear to be a shortage of soybean demand. If anything, it appears like major buyers, China included, are somewhat stockpiling beans. And the evidence of that is basis in Brazil is strengthening, where you could say, okay, they're giving a preference to that business down there, but they were already cheaper in Brazil than here. It's not like we were losing demand to Brazil. We've known that for probably 9 months, that when harvest in Brazil rolled around, we'd probably lose business to them, and that's the case. Why is basis improving in the U.S. if we have a demand problem? Cash, basis is strong and strengthening. Next thing is spreads. So let's look at the spreads. And this can get real confusing. It doesn't have to be spreads. Just think it's how this spread in particular is July minus November. So it's the difference between the July contract and the November contract. When you start seeing strong demand, what you would have is the nearby rises faster than the deferred, right? So your old crop beans are gaining on your new crop beans. If you don't have demand, they're like, just hold on to those beans, I'll pay you more later. You get the carry in the market, right? I really don't need beans today, but if you'll hold on to them, I'll pay you something. When you have demand driven, you get the opposite. You say, hey, just give me those beans today. Think about it as the same justification you'd use a credit card for. I don't quite have the cash, but run it today and I'll figure it out later, right? So what we've seen, and I'm not saying this is anything through the moon or over the charts, we had obviously stronger spreads, but on this move down from last Friday, what has happened to the spreads? This is the corn spread, which is the same, but let me get we want to show the image of the bean spread. Where is it? Here we go. Okay. So we had, so this is the July, November. So yeah, we had a friendlier spread a while ago, but when this market absolutely got destroyed on Thursday and Friday, what's happened to the spread since? It's coming up, which means July is recovering faster than November. Give me beans today. So as we go back, let me scroll through this. As we go back and we look at the soybean situation, is this the beginning of the end? Is this beans are just going to absolutely get destroyed and, party's over? We're going all the way down to $7 or $8. That's a possibility. That's a world that I'm not too excited about. We have to acknowledge it's a possibility. But that's not really what the fundamentals are saying. Fundamentals are saying cash, spreads, futures. Cash prices are rising. Spreads are coming in our favor. And we've actually seen, you hate to call it a recovery, but it's not going down, right? Overnight trade from Sunday to Monday put in new lows. Since then, we've had 2 green days and we're slowly climbing out of this. Report on the 10th. The action plan for us this week is just to not rock the boat, to not take action, and to go from there. Now we're going to do basically the same analysis on the corn market. Let me get that pulled up here. Okay. So now we're going to talk about sharing the screen here for the corn. There we go. Let's get a green marker. I think that'll work nicely. And we saw the corn position was oversold and it was overbought. Then it fell down. What happened recently? And we'll get this in red for a little effect. We saw spec funds started buying again. They started buying corn. Before that report, they started going long corn, which is very interesting to me because we saw the report actually brought more corn acreage, but how the spec funds were reacting to that was like, okay, corn's still going up. Even if they have more acres, they're still going up. Very, very interesting. And what we've seen from a pricing standpoint is that this support here of the 200-day moving average is holding very strong. Every time we get under it, right after that, we can bounce, right? We get under it and we get a little bit of a bounce. The good news is for the first time, we are in uptrends on this. And so now we could say, okay, maybe we get the seasonal rally. What's the potential? I mean, I'm setting my sights back on that last rally that we got. I don't see a reason. We're early enough in the crop year. If we get a little hiccup, I don't see why we can't go tap on $5 again, or 5.10 or 5.20 or something like that. So let's just keep our eyes on it. But corn in an uptrend is friendly. And then the same question remains, do we have fundamentals for strong corn? Is this justifiable? Similar story. So let me get the green up here. We're seeing, I know that everybody's corn basis isn't above the 3-year moving average. This example is from Tippecanoe County, Indiana, home of Purdue, where the Purdue crop basis tool is. You could actually go in there if you want to look for your specific county crop basis tool, Purdue University, and then you can filter it however you want to filter it to look at it. It's real handy. Yeah, we're seeing basis recovering. That's cash, strength in the cash market. And then now let's go look at that spreads futures that we were looking at earlier, which is the corn. And we're seeing a similar story, right? So we're not back to those levels when we had $5 corn, the spread isn't, but what has happened over the last 4 sessions? A little bit of recovery to that spread. It seems to me like we don't know what will happen on next Friday's report, but speculators, they reduced their sold position in beans and they extended their long position in corn. Now corn is in an uptrend basis, so cash buyers seem willing to buy corn. They seem willing to buy beans. So cash buyers are buying beans. Speculators are either reducing beans or buying them. The spreads are showing a rally. If you would show me all of these charts, just say, hey, I'm going to erase what year it is. I'm going to give you the information that it's the first week of April, or April 8th, right? Just beyond the first week of April. This is what the spreads look like. And you didn't tell me there was a trade war. I would say, yeah, that looks about right. It looks like we're starting to ramp up that scenario that usually gives us a spring rally. Buyers are realizing that they probably need to pay a little more if they want to move that grain before stuff gets busy in the field. As speculators are saying, we might get a little weather concern. All the good news from a supply side of the bean crop in South America we basically have. There's still a little uncertainty on the corn. It basically just looks like get long before a spring rally. If you would just show me the charts, I could not tell you that there was a trade war. Will that hold or not? I don't know, but that's no action recommended. This is one that we watch closely, but we need to be very careful between the signal and the noise. And I spent a lot of time really since Friday just got, the bean market got punched in the gut. I was like, listen, do we need to adjust our course of action? Do we need to change our strategy? Do we need to deviate from our philosophy of managing markets, because this year is exceptional? And first conclusion was, hey, when the world seems messy, 2 steps back, stay calm. The second thing is, I'm not sure that we actually need to change anything that we're doing just because the headlines are a little messy shorter term. So let's keep an eye on it. We got a lot to go over now. Let's just wrap it all up with a little summary. All right, the summary, here we go. Corn, seasonally, it is a sell. Beans, seasonally, they are a sell. Although this sell window lasts, we're just at the beginning of the selling season. The managed money for corn, technically they are long, but they aren't bought enough to justify selling. We're kind of waiting for them to buy more so we can lean into those sell positions, sell orders. On the soybeans, they are sold, but not sold enough to justify buying it, but they're also, it's just neutral, right? Both corn is a little long, beans are a little short. They're both close enough to neutral to where it's not really giving us an indication. Corn, as of yesterday's trading session, is in an uptrend, and beans are in a downtrend. If we can get this audio working. Corn and soybean basis have improved over the last month, which points to healthy demand, period. In some areas, basis has already surpassed historic averages. The corn market in Chicago is finally in an uptrend above the 20-day moving average. The soybeans gapped lower last Thursday and had a very large down day on Friday before putting in the lowest trade since December in the overnight trade on Sunday. Period. Monday trade has begun a recovery with follow through in the overnight trade between Monday and Tuesday. Try to stay calm. Try to not project all of your net worth on 9-something beans, and let's keep a really close eye on what's happening in markets and see what this report holds on Thursday, see what the report holds, what weather and planting looks like on the other side of this report. But for the time being, if we need to adjust by next Tuesday, we'll have a conversation, or after that. For the time being, no action recommended. Let's try to keep our cool, try to keep our calm, and who knows, maybe it's just going to be a whole lot of noise for what ends up being a more normal spring market. Have a great rest of your week.